Hello friends, in this channel I would be discussing practical concepts of economics in a very easy and fundamental way. In this particular video, to start with, I'll be talking of what is really ailing the Indian economy. So let's go and see. So let's begin by asking the question as to what's really ailing the Indian economy. Before we begin, just have a cursory look at this inflation graph. The reason why I took the starting year is 2009 as we could have gone back from 2009 also. The reason why I took 2009 is because this is the year when we emerged from the global financial crisis. Just note that Indian economy has been a very high inflation economy over the years, which has come substantially down now since the beginning of 2014. Now, this is a very important indicator as to what is happening in the Indian economy. I would argue in this presentation that Indian economy has been going through a structural change, which is actually positive in the long run, but pretty hard in the short and maybe in the medium term as well. Now, the reason for the high inflation rates that we have seen in India over the years have been because there has been a lot of money supply in the economy if we compare it to the goods and services available. Why is that so? Why is really the money supply had been constantly outstripping the productive economy? And when I say the productive economy, I mean the goods and services produced in the economy. Now, the money supply could be higher because of supply side reasons, which means there could be sudden loss of production in the economy. It can happen because of lower monsoons, droughts, some loss of sovereign productive territory, large-scale destruction happening, some of the trade partners, the relationship between some of the major trading partners have gone sour. None of them has been the case in India. Of course, there have been seasonal or yearly variations in monsoon to small extent, but that certainly doesn't explain the secular high or elevated inflation levels. And in any case, because of these reasons, the economy mostly autocorrects itself until the sovereign stupidly intervenes for some reason or the other. The other reasons are demand side reasons, which, as I've indicated above a little bit, because of the loose fiscal or monetary policies, credit or the money supply goes into unproductive areas of economy. Now, what are those unproductive areas? Essentially, asset markets, primarily real estate. In the supply side case, unless the sovereign intervenes, the economy autocorrects itself. However, in the demand side situations, in some of the demand side situations, structural changes are required to correct the anomalies. Now, what's the current scenario? Why I say that Indian economy has been going through a structural change? Screws are being tightened on the black money. Now, what happens is this. Because of the screw tightening of the black money, a lot of it had been going into the real estate. Because of that, the real estate valuations have seen a decline over the years. Decline in real estate prices has led, and the decline in the black money has led to a decline in consumer demand, specifically non-utility, luxury, and consumer goods. Let me explain. When the real estate prices goes up, it invites a lot of speculation in the markets. Also, there are a lot of intermediaries who make a lot of money in the real estate market, basically making real estate speculation as kind of an ATM. This money is used in ultimately in consumption, particularly middle to high-end consumption. When the prices starts reducing, the speculation goes away, leading to a decline, serious consumer demand decline. Also, we have seen a lot of businessmen who take bank credit, loan from the banks for business purposes in creating something productive, in producing goods or delivering productive services. However, during this real estate frenzy, we did observe that a lot of these businessmen have used bank credit for essentially real estate speculation. And those people are now in a big trouble. They didn't create anything productive. They didn't have productive assets which could produce products. But they are holding real estate whose value has declined. Against this real estate, high leveraged real estate, they had taken bank loans further, which again are in trouble. Also related to that has been the stoppage of evergreening of loans. What happens in this is, let's say a businessman or any person of influence goes to the bank, gets a loan of X amount for 5 years, invests in property, thinking in 5 years down the road, the valuation of property will increase, he would sell it, give back the loan, and keep the profits. Or even in business for that matter, which let's say his intentions are genuine, invest in business as well. 5 years down the road, things don't go according to plan. He can't pay the loan back. He goes to bank again. At this time, he gets a new loan of X plus Y per. Using that, he pays back the old loan with interest and keeps the Y amount and invests further into some business or again into real estate. This process of evergreening of loans has stopped. Again, putting costs on the bad behavior which hasn't been put before. Of course, this has resulted in a lot of pain in the economy. And let's not forget, real estate, construction of buildings, factories, apartments, malls, gives employment to a lot of people, especially from the countryside. A lot of labor gets employed into it. That slowdown in real estate has led to real job losses in the sector. So let's understand the process a little bit pictorially. Blank money or bank credit taken for business purposes. Bank credit taken for business purposes, and black money emanating out of tax leakages or corruption find its way into the real estate market. This leads to real estate valuations rising. A rising real estate value means you can give a high real estate value land piece as collateral to the bank, thus taking more credit. So the credit offtake increase further because of the increased collateral value, which means this further fuels asset price frenzy. So if you take more credit, invest more in land, it further fuels asset prices. Now let's remember, as I told before, this asset price increase has very little to do with productivity. There is very little productive goods and services that are being produced in the economy, and that has been the reason for so many years of high inflation. Some people get the credit, they invest in non-productive areas, in asset prices, the asset prices increase, but correspondingly the products or services, which are the real core of the economy, don't increase to that extent, creating a lot of inflation in the economy. And always remember, this kind of inflation is the biggest wealth transfer. This is stealing money from poor people or middle class people to people who have access to credit, or in other words, the asset owners. This is, I repeat again, this kind of inflation is the biggest wealth transfer. So let's say I take 100 rupees from you, I steal 100 rupees from you and give it to person Y, or I take it. I just take 100 rupees from you, I steal it. Wouldn't you be upset about it? Of course. This is exactly what it seems to be, a stealing. The only thing is that we don't get to know it because most of us don't understand it. And this has been going for years and years in the Indian economy. Of course, for some years, along with the high inflation, you will get a relatively higher GDP growth as well. GDP, let me tell you, is a spending matrix. Now, what I mean by that? GDP is a accumulation of what in an year is spent in the economy. So I go and buy stuff, I consume, that's my consumption expenditure. The government spends something in the economy over and above the taxes it collects. That's a net government expenditure happening in the economy. Industries have some capital expenditure, they build factories, etc., plants, etc. That's the capital expenditure that industry is doing. That's again accounted for. And I'm exporting goods outside the country and importing goods inside the country. So money is coming in the country or net going out of the country in case I have a trade deficit. That's also counted in the calculation of GDP. Combined gives the number what we call the GDP of the country, which, as you can see, is essentially what is being spent in an year in the country. Now, certainly, if there is going to be a lot of credit, a lot of money coming in the economy, there is going to be more spending in the economy. The more spending means some of it can be accounted for the higher inflation, some of it also leads to large part, or in fact I would say large part of it is accounting for the higher inflation, which is nothing but price increase of asset prices, some consumer goods and other things, and some of it definitely because of increase in inflation also gives an incentive for business people to produce more, leads to a higher GDP as well. But that is only for a few years before things go horribly wrong. As more and more credit is required to push the valuations of the asset prices further. And this process, as one can understand, cannot go for very long. This is like riding a treadmill to hell. And of course, unable to sustain a severe price correction, and unable to sustain high valuation prices, it leads to a severe price correction. Now, a severe price correction in the asset prices is very serious. I tell you why. Because not just the asset owners are losing notional wealth, but these assets have been used as collaterals with the bank to get further loan. Now, if the businessman or the person who has taken the loan is not able to give back the loan, the bank is holding the asset whose valuation is far lower than what it was a few years back when the loan was given. This leads to problems with the bank balance sheets. Now, what then would happen is that the bank balance sheet is repaired, or what we say, the bank is capitalized again by first selling whatever assets we have of the defaulters. This process, to expedite this process, the government brought the Insolvency and the Bankruptcy Code Act in the year around 2016. But since the valuation of the asset prices that the bank is holding is low, this would not be sufficient at all. What then has to come is the rest of the capital has to come from the government or the RBI. Now, the government has been announcing over the years some capital infusion in the banks, but again, that is not sufficient. RBI, on the other hand, is also having capital of its own. Now, there is always a fight, as you notice in the news going on, between the government and the RBI over that capital. In my personal opinion, RBI should start using that capital to refinance the banks, as the situation is really serious. And once this process is complete, finally the system is cleansed of all the mess that was created, and it's ready to start afresh. Also, but it's very important that penal action is taken against the people who have misused the bank credit, which was taken for business purposes but invested into real estate, and people who have intentionally participated in this, as far as the authorities are concerned. This is important so that an example is set, and this process, this irregularity, is not repeated again. Otherwise, this situation will keep on recurring, and there will be no way out. Previous slide, the inflation has come lower, far lower than what it was 5 years back, or I would say even a decade back for that matter, because of structural changes. But the GDP also has been suffering, obviously, because the credit offtake has come down. And let me tell you this, even though in the intermittent years the GDP has shown uh, high upticks, but part of that reason has been because of the fact that uh, somewhere around 2014 or 15, the GDP estimation methods have changed, and at least some part of the high uptick is being morphed in the intermittent years is being morphed because of these changes in the GDP estimation methods. So the pain is real. Of course, there can be minor variations each year, but the pain in the economy is real. But this pain, as I repeat again, is because of structural changes that are taking place in the economy, which are very good in the long term, but painful in the short term, definitely, and maybe in the medium term. The only way to alleviate the pain, now this will not remove it completely, but the only way to alleviate the pain to at least some extent is increase the fiscal deficit and reduce the interest rate supply sharply. Why I say that? Understand this, that money supply in the economy is reducing because banks can't lend, their balance sheets are stressed. Borrowers who have taken the loans can't borrow much further because they are already underwater. So the only way to increase the money supply in the economy is by the sovereign, by the government. And how the government can do that? By increasing the fiscal deficit, by spending more than what it is earning. Now this increase in fiscal deficit puts pressure on the interest rates, as it can lead to little high interest rates. So it's not a big problem right now, but it can in the future lead to higher interest rates. For that, interest rates have to come down sharply by RBI. Also, this can lead to at least some borrowers on the margin coming forward and taking credit. Some people say increasing fiscal deficit, reducing interest rates can be inflationary in the nature, and this would obviously further, so as some people claim, would plunge the rupee vis-a-vis the dollar. I completely disagree with that. Of course, these things can be inflationary, but that completely depends upon the situation. If the credit intake is low, which currently is the case, increasing money supply in the economy will not be inflationary. I mean, already the money supply is low, and that's the problem. If you increase the money supply by a little bit through the government and RBI by introducing the interest rates, inducing the increase in the money supply, that will not change the picture much. It's important though that where this money supply goes. If the money supply goes in the hands of the consumer, that will be the place which can at least boost the economy to some extent. Reason being, since the money supply is already low in the economy, the demand is low in the economy, as people are having employment issues, the salaries and the wages are not going up, uh, the factories that were set up uh, are still underutilized. So it's important to kickstart the demand in the economy. And so the money supply, the increased money supply, has to go to the people who can purchase goods. This can be done by the government by reducing the GST and give some IT or income tax relief. I would say GST, reducing the sales tax, or in other words, the GST, thus reducing the price of the products, gives a bigger boost in this situation, as if we give some direct IT benefits, income tax relief, a large part of it can go to the savings and not really boost the demand. And second is, there are few people who in the country who gives income tax, so it will hit very few people. GST, if you reduce, will hit a larger population. Ideally, both will be okay, but if someone has to do one, I would say GST is number one. Let me repeat again. This is not the time to be a fiscal hawk, which means it's not the time by the government to tighten its belt. I understand there will be revenue shortfall that is being budgeted in the budget because the economy is slowing, the taxes are low, the taxes paid by the people are low. So there will be a revenue shortfall, but that's okay. Don't have to worry about it right now. That will not be a cause of concern right now, as the money supply in the economy is already low. You have to be fiscally loose. And let me tell you again, if the fiscal deficit is not increased right now, this will be another kind of wealth transfer. It will be a wealth transfer from the working class to the bond investors. Why I say that? Remember, I told you before, inflation is a wealth transfer from asset owners. Inflation is a wealth transfer from middle class or labor class to asset owners. This will be a wealth transfer again from specific asset owners who are bond investors. The wealth comes to them from the working classes. Why I say that? Because if the government increases its fiscal deficit, the amount of borrowing from the market the government does increases. This can push up the interest rates to some extent. Of course, it will be cushioned by the RBI by reducing the repo rate, or the rate, or in other words, the rate that RBI sets. But still, chances are higher the interest rate goes up somewhat. That would mean the prices of bonds decline. So the bond owners face losses, of course. If the fiscal deficit is not fiscal deficit is not increased, or rather kept what has been budgeted, or increased only a little bit, the bond prices would not decline. The working classes will suffer. The bond investors will prosper. So this would be a wealth transfer from the working class to the bond investors. Let me put it this way. Any action you take in the economy let me put it this way again. Economy, in most of the times, is not a zero-sum game. The idea is to make it a positive-sum game through the policy actions if required. But even if you make the economy a positive-sum game, even in that scenario, there will be some losers and where there will be some gainers. We don't have to take concern about the losers and gainers specifically, but we do have to take concern of the fact that the overall economy will be in good shape by those policy actions or in bad shape. If The answer is that the overall economy would be in a better shape by those policy actions. It's okay. There will be some losers anyways. We have to make sure that the overall economy is better. So following this, using these policies, the overall economy will be better. The bond investors or the investing class in particular will be losing somewhat, and the working class and the economy overall, more importantly, will be gaining a lot. So that is why this policy is, I repeat again, let's conclude. The current slowdown in the Indian economy is primarily due to the structural changes happening in the Indian economy, as I explained before. What are those structural changes? The credit that was going into very few hands, which was further being used in non-productive areas like asset speculation, particularly real estate speculation, has stopped. Reduction in black money, or the tightening the noose around the black money, is also a very, very important reason why it stopped. Also, the ever cleaning of loans have stopped. All these have contributed to the credit being going down into these non-productive areas. This has led to a default by large amount of these players, causing stress in the bank's balance sheets, a severe slowdown in demand and employment opportunities. All these measures are very good in the long term, but certainly painful in the short term and maybe in the medium term as well. The effects of these can be alleviated to small extent by increasing the fiscal deficit of the government and the interest rate policies of the RBI. Of course, there's another way. We can opt for getting things back online in the short term, but mess in the long term. By stopping all these structural changes, stopping the noose tightening around the black money, letting the things as they were, letting credit again go seamlessly into the real estate market, letting inflation go higher, and letting this wealth transfer from the working classes to the asset owners continue. If that is not what we want, then I'm afraid this is what structural changes in the economy do. Hopefully, though, by these fiscal and monetary methods, they would be able to cushion somewhat by this severe blow of the economy. Thanks for listening. Bye for now.